Today we're going to talk about voluntary disclosure, especially involving business owners with unreported cash income. Whatever you do, don't wait around for the IRS or your state taxing authority to find the non-reported cash trail. That's a problem. In and of itself, cash is not illegal. Thousands of legitimate businesses across the United States daily receive large amounts of cash, every day. Restaurants, salons, contractors, repair shops, medical practices, convenience stores, event businesses. The problem here is not simply receiving cash. The problems begin when cash receipts never make it onto your books, into your point-of-sale system, into your payroll records, or ultimately onto your income tax returns. Listen, if this is discovered, at this point it's no longer how much tax is owed. The question becomes whether the IRS or your state taxing authority is going to view this type of conduct as willful tax evasion. Hi, I'm David W. Klasing. I'm a dual licensed tax attorney and CPA, and for more than 25 years, my team and I have represented business owners that are facing IRS criminal tax investigation. We've represented many a cash-intensive business audit, and we've engaged in voluntary disclosures over cash matters. Today I'm going to explain why unreported cash income may require an IRS criminal investigation voluntary disclosure analysis, why timing is critical in looking at this, and why waiting for the federal government or state government to discover the unreported cash trail can exponentially increase your criminal tax exposure. If you get nothing else out of this video, cash isn't the problem here. Concealment of cash is. Many business owners believe that cash itself creates suspicion. Well, it doesn't. Cash-intensive businesses exist in every industry. What concerns the IRS in most states is what happens after the cash is received. Did the cash ultimately get picked up in the accounting system? Was it reported on the income tax return? Did it appear in your sales tax filings? Was the cash used to pay employees off the books? Didn't wind up on a W-2 or a 1099? Was the cash deposited straight into a personal account, not being included in the business's records? Or was the cash simply never reported? Those facts, not the cash itself, determine how the government views your case. Listen, the IRS doesn't need a perfect set of books to come in and find this type of activity. Many taxpayers assume that missing cash cannot be reconstructed. That assumption is flat out wrong. The IRS in many states, if they're looking for this, are going to estimate unreported income. They're going to use things like bank deposit analysis, the cash expenditures method. You can read about these things on my website. The source and application of funds method, the markup method, the unit volume method, the point of sale data, the Forms 1099-K, the payroll records, the vendor invoices, the inventory records, the customer invoices. They're going to look at merchant processor records and third-party interviews. The government doesn't always need a perfect set of books. When it gets dangerous is when the government has enough evidence to come in and build a reasonable reconstruction of your taxable income. Listen, the window of voluntary disclosure closes quickly. One of the biggest misconceptions is believing you can wait until the IRS contacts you, or your state for that matter, to fix things. In reality, the voluntary disclosure window may close long before that. If the IRS has already begun a civil examination, or opened up a criminal tax investigation, or received reliable data from third parties, or otherwise discovered your unreported cash, your voluntary disclosure is no longer going to be considered timely. By the time the taxpayer realizes the government's onto the unreported cash, the opportunity to voluntarily disclose may already have evaporated. Some taxpayers believe that voluntary disclosure is simply amending returns. It isn't. the IRS criminal investigation voluntary disclosure practice is designed for taxpayers whose tax noncompliance was flat out woeful. The program requires truthful, timely, and complete disclosure, cooperation, and accurate reconstruction and financial compliance. It's not really a penalty waiver program, but taxpayers generally receive more favorable civil treatment than if the IRS had discovered the noncompliance outside of the program. In proper circumstances, it's an effective grant of immunity from tax crimes. It is certainly not a do-it-yourself project. Your voluntary disclosure strategy must fit the specific facts and circumstances of your case. Whatever you do, don't quietly amend your tax returns without analyzing your criminal tax risk here. One of the most common mistakes is asking the original CPA or bookkeeper to amend several years of tax returns when you get cold feet over not reported cash. Doing so without first evaluating your criminal tax exposure is a mistake. In a woeful cash skimming case, those submitted returns may effectively tell the IRS, and your state for that matter, here are the omitted years, here is the omitted income, here is my gift-wrapped criminal tax admission showing you that the original returns were patently false. Amended returns can't be appropriate, but only after determining whether voluntary disclosure should have been considered first. Whatever you do, don't come in and rewrite history. When business owners panic, they sometimes begin repairing the records. They create backdated cash logs. They rewrite QuickBooks. They invent receipts. They delete point-of-sale data. They move cash. Or they pressure employees to support a new version of events. Those actions rarely help. Messy books can often be reconstructed. Patently false books the government can prove are false create completely different problems. The first objective here is to preserve the real evidence, not fraudulently manufactured, better evidence that's going to blow up on you later. Listen, not every cash omission requires voluntary disclosure. Some taxpayers may be mistaken and acted non-willfully. Some may qualify for amended returns, reasonable cause relief, or other civil solutions. But where the facts of your case suggest years of deliberate cash skimming, false books, off-the-books payroll, sales tax omissions, or concealed receipts, the analysis changes. The first question is no longer, how do I fix my income tax returns? The first question should become, what's the safest path back into compliance without facing criminal tax prosecution? This should be done before the federal or state governments lock onto a potential criminal tax narrative against you. So, if your business failed to report cash receipts, paid employees off the books, kept incomplete records, or your income tax returns don't reflect the money you actually received, whatever you do, don't wait for an audit. Don't wait for a bank summons. Don't wait for an employee complaint or an IRS criminal tax investigation. Don't let anybody make the first move. At the tax law offices of David W. Klasing, our dual licensed tax attorneys and CPAs analyze cash-intensive businesses through both a civil and criminal tax defense lens. We review bank deposits, point-of-sale records, cash logs, payroll, sales tax filings, income tax returns, merchant records. We look for Form 8300 issues, and we also analyze California tax exposure to determine whether a civil correction or an IRS criminal investigation voluntary disclosure analysis is the safest path forward. Call 1-800-681-1295 or visit Klasing-associates.com to schedule a confidential, reduced-rate initial consultation today. Because when it comes to unreported cash income, the best opportunity to control the outcome of your case is often before the IRS finds the trail of unreported cash. Dave Klasing, tax attorney, CPA.